So it's finally here, ladies and gentlemen. Today we have seen a huge market crash. As you can see here, the Nasdaq was down 4.18%. Russell, this is a small cap, 3.47%, and S&P 500 was down 2.64. And you look at the Dow was down 1.35. So we can see the crash was actually broader, not only the Nasdaq, but also the Dow, the small cap, everything just went crashing, right? But of course, the stock that were affected the most were the tech stocks and semiconductor stocks. That's Micron, AMD, even Nvidia was affected too. If we look across the globe, you can see here the Europe market was also down. We look at Japanese market, Nikkei, Hang Seng, the Chinese market, everything was just down today across the globe. So this can be bad for some people, but for smart people, this can present opportunity to buy a stock, because the crash actually didn't happen because there was a huge fundamental change in terms of a semiconductor or AI or anything like that. It's just more of news, which I think there was a little bit of oversold. So if we look at what actually crashed the market, was this news here. Kevin Walsh, this is for people who don't know what Kevin Walsh is. Kevin Walsh is a guy who just replaced Jerome Powell as a Fed chair, and he was selected or appointed by Donald Trump. Wall Street Journal says Kevin Walsh faces early Fed pressure as a strong jobs data fuel a hawkish shift, rate hike bets, and policy clash. The job market data didn't turn to be as good. And also, there is a fear that the Fed will hike the rate instead of cutting, because the market was really preparing for rate cut. And because we've seen Donald Trump, of course, was pressuring Jerome Powell to cut a rate. And everybody was expecting, of course, a new guy who's coming will do that. But because of all the odds and look at the inflation numbers, it seemed that the rate, according to the market bet, they are predicting that the rate will be hiked. And because of that news, and that's what we saw, the huge market crash today. But as I've said, this can be opportunity for you to buy some shares, but don't just go out and buy anything. I'm going to show you some of the ETF that you can buy, and especially if you're a passive income investor. So check this. I'm going to show you some list of the ETFs. We're going to start with Roundhill here. Roundhill has a bunch of ETFs. These are some of them, of course, weekly and monthly. And if we look at all these ETFs, today's price movement, Roundhill Memory was down 15%. Holding was down 15%. So we look at AMD, meme, everything to deal with semiconductor and big tech. And crypto too, for example, you look at the Ethereum, Ether cover call was down. Nothing was up at all. So when I look at this, I'm looking at opportunity to buy some of these shares. But before you buy, you got to look at the ETFs that have performed. This is a return for 6 months, and I have a dividend yield, I have 1 year return, and we have a year-to-date return. So if we look at ARM's holdings and AMD year-to-date return, they have returned greatly. If I go to 6 months return, we can see that these two ETF have been performing well. But if we stretch all the way back to, let's say, since inception, AMD didn't do well. So all this return of AMD came just within a few months. But this, it's a good indication to see what stocks have been performing well. If you look at the Go, it has returned 11% to date, and 6 months, it's flat. There's no really NAV erosion on that one. By the way, this is just a chart performance. There's no dividend included here. So these are the ETFs I'm going to kind of pay attention to. Look at the ETFs that have performed well and there's no NAV erosion. If we look at the Nvidia, for example, it has returned 1 year 48%, very good, and the yield is 61%. So today it has crashed about 7%. I'm very comfortable that I can buy Nvidia, and there's no NAV erosion for that. So that's what I'm going to be looking at. And we can go to another ETF provider. This is from YieldMax. If we look at YieldMax ETFs, pretty much all of them were down today, as you can see here. The semiconductor ones were affected the most, 10%. AMD crashed 10%. But if you look at the performance of AMD within 6 months and 1 year period, has returned great. This is just a price return without a dividend, as I've mentioned. And we can see all these ETFs that have returned green. They don't have any NAV erosion. Chippy is one of the best. If we look at the Chippy YieldMax Semiconductor Portfolio ETF, this ETF has returned over 200%, I think, if you include all distributions. But if we just look at the 1 year return, is 128, and it does pay around the 31 to 40%. And today has crashed 10%. So I would think this could be an opportunity to buy these type of ETFs. That's how I'm going to pick which ETF I'm going to buy. I'm not going to go with the ETFs that has returned negative within 1 year. For example, YieldMax Mar Option Income ETF. Before this crash, it was down negative 35%. With today's crash at 9%, I don't think it's going to rebound to positive. And we look at gold. Gold was hot at one point. It did really well. But right now, year to date, is down negative 13%. But if we look at the 1 year performance, is 2%. The yield is very high, around 80%. Now it has crashed about 7%. So that can be an opportunity to pick some gold if you don't have gold in your portfolio. GPTY is one of the best. It has always returned really good, and there's no NAV erosion for this ETF. It crashed 7%. That can be opportunity to pick this ETF. MSTY down 6.43%. It pays a lot of distributions, but I'm not going to see this as opportunity to buy because this ETF itself has been down forever. If we look at the other ETFs that I'm going to avoid, Connie's been doing bad. So even with today's market crash, I'm not going to pick Connie as an opportunity because within 1 year has returned negative 45%. If we look at year to date, negative 30%. And within 6 months has returned negative 39%. So I'm going to avoid these type of ETFs, but I'm going to pick and select the ones that have greater return. TSMY, very good. Today is 6%. So you'd expect there's a rebound for these type of ETFs because there's no NAV erosion. And again, these are just return with no the dividend. If we put a dividend, of course, the return here will be more. If we look at YieldMax, really hasn't done well. I'm not too excited about YieldMax. So that's pass. MRNY. Moderna, do you remember this stock used to be one of the worst performer, but then Moderna kind of rebound is coming up again. And I would say there's going to be opportunity to pick Moderna because the stock has rebounded, and I think there's a good trajectory that stock is going to go up. The other ETF issuers that I went to review is from NEOS, and we know one of the best is QQQI. This ETF has returned 1 year 25%, and year to date 8%, and 6 months has returned 8%. Return with no distributions. If we put distributions is more. 2 weeks ago, I made a video talking about QQQI and how you can generate a lot of money using this ETF. So if you want to know more, you can check that video. And also don't forget to subscribe if you haven't subscribed, so you can always receive updates. And if you like this type of content, as always, please smash the like button. Let's continue. If we look at this ETF, IWMI, NEOS Russell 2000, return is very good, 32%. And we look, today has crashed 2.80, so round up to 3%. So this is pretty similar to the index I showed you earlier. If we look at the QQQI, and if we go back to look at the Nasdaq was 4%, Russell was 3.47. It did go down, but less than the Nasdaq itself. If we look at the Russell 2000, this one here went down only 2.84, and the Nasdaq went down more than 3%. So they did it pretty well. If we look at the return, pretty good return within 6 months, within 1 year, within year to date. And if we'll look at other ETF that has good return, NEOS MLP Energy and Infrastructure, I talked about this ETF also like last week, and it has returned 18%, and it's one of the actually really good ETF that does not have NAV erosion. It didn't go down as much. So these are just some of the ETFs I wanted to show you. Just pick those 3 ETF providers: YieldMax, Roundhill, and NEOS. but there are more of ETF issuers that you can look, and you can look at those stocks that have done really well. And if they crash, it could be an opportunity to pick. So that's things I just wanted to keep you updated on today. I'm going to make other video on other ETFs that I found. Somebody have made a comment about them, and these ETFs, I can tell you, I really don't see many people talking about them, but they are one of the best ETFs because they have a great return and no NAV erosion. So we're going to discuss about those ETFs maybe tomorrow or Sunday. Don't forget to smash the like button, and don't forget to subscribe. Thank you very much for watching. I'll catch you next video. Bye bye.